Welcome back to MainStation. Today I'll be going over the major stocks, especially in the tech sector of the United States, and since I told you that we might not have enough time for this analysis in my last video, I promised to make another video about it, and here it is. So let's get started. Here we have Tesla, and what's interesting about Tesla, in my opinion, is that we have these very defined ranges in which we trade, or in which we see the price move. You can see back here a few years ago, 2011, we had very defined range, a nice like ascending triangle almost. We've seen a little head and shoulders, which didn't really break bearish. So this had also been an indicated that we see strength, and since we broke resistance right here, it's been an amazing bull market until we again went into another it's more symmetrical, but still if we go like this, it's more more symmetrical than ascending, yet since symmetrical triangles are usually a continuation pattern, and we've seen a bull market, you usually see them break bullish. So again, we have a very defined range of price movement. You can see we have already touched like 380-ish, 390-ish. Like you could draw it also like this if you want to, like 4 to 5 times. So this is very defined. On the bottom we've seen 3 wicks. We can draw a second bottom here and here, maybe like here. So very clear resistance, but still quite choppy. So this is also an indicator that price movements in this stock are based on emotions, or are a bit emotional, since what's his name, Elon Musk, is a very how do I term this, not childish but a little bit his moods vary a little bit in the sense of his state of mind. And the following of Tesla is also, of course, a bit more looking into the future, maybe a little bit more millennial, heavier than other stocks. And so therefore we see like big drops and big buys candles on news regarding Tesla and Elon Musk. So you don't see quite nice, or you don't see too, or at least here I don't see any really defined pattern. It's just a very defined trading range, which is more symmetrical than anything else. So of course you want to be looking to break either to the downside 250 or 390 up to 400. If we break 390, we most likely run to 400 and then break 400 and run maybe at least 10% to 440 and maybe to 500. So you want to be looking there. Yeah, that's Tesla in a nutshell. If we go to Amazon, yeah, you can see the bull market in Amazon since the .com bubble. Just amazing opportunity right here. Yeah, so we had this channel we've been trading in for over a decade, and it broke to the upside. Now it has retraced. It has very nicely touched right here, and you could say that we broke below, but we had a very nice buy candle. Wait, that's my alarm. Never mind. Okay. Yeah, we had a very nice buy candle right here with some decent volume. Yet what I don't like to see, and we'll be seeing this also in other stocks, is that the most volume you can see was on the sell side, and not even on the bottom, but before the bottom. So you can see this right here, very big sell volume. And now we have, or since the short rebound now 3 days ago, like we've seen declining bull volume, which is usually more of a sign of a short-term rebound or consolidation, and maybe a rebound up to recent price levels. But we already seen a rebound to support right here. So I don't know. We already touched the 12th day moving average. We could very well run into the 50. But as you can see, the moving averages have turned mostly divergent, and we'll be looking to a death cross of the 100 and the 200 day on Amazon, most likely. Yeah, in general, I told you if you go to the S&P 500, do this. Yeah, I told you I was looking for a rebound up to like price levels right here, like it did in 2008. And I don't know why no one is comparing 2018 to 2008. I haven't seen yet anyone comparing these two price movements. I mean, yeah, the sentiment, it might be a little bit more bearish today than it was back then. A little bit, at least for the majority, or at least since more people are aware of like the US sentiment around trading the trade war. Damn, I sometimes forget my words, but yeah, they're a bit more aware now, maybe than back then in 2008, about the crash which could be coming. So we'll see. But the average mom and dad isn't, and most likely isn't aware of what could be happening in 2018 or in late 2018, and mostly in early 2019, Q1 and Q2. So we could very well see something similar to 2008, at least percentage-wise, of the drop in the S&P 500. So back to Amazon. I was looking for the possibility of a inverse head and shoulders. You can see our shoulder, our head, and possible here for a right shoulder. Didn't happen since we broke bearish. So now we have a retrace. We have like a channel line right here. No real. I mean, you could do it like this. That's true. maybe find some sort of symmetrical range in which we trade. Maybe we can do this, yeah. So extend it a little bit. This maybe. So we have just moved downwards, and of course a little rebound. I don't know how long it will last in general. If you go to the 1 hour, you can see we have higher highs and higher lows been established since this range, which is now maybe becoming support on Amazon. On the 15-minute, you can also see a bit. You can see it a bit more clear. The higher low and higher high continuation. So if we break the higher highs and the higher lows, we most likely will be looking either like down here for establishing support. Maybe of course I'm more bearish than anything else on a stock market, but we could see like an head and shoulders pattern if we go down here, see a little bit of a rebound, and maybe find then continuation to the downside. So I told you about the possibility of a rebound. Well, it happened. It was the biggest point gain in US history in the stock market, if I'm correct, not in percentage wise but in points. About 6%, I guess, so very, very big rebound for the S&P 500. Yeah, quite exciting. So if we now look for any price levels on Amazon, I'll be most likely looking like to 1,000 for the psychological level. Since we don't have much support right here, this is pretty much free fall until like 2,100, 1,100, 1,000. So you can see also a gap right here, and on Amazon. So this might get filled. It's not always the case that gaps get filled, but anyway, if you go back to 1,000, then I'll be looking to this trend line right here, since this has been major support, converging with the 200-week moving average. You can see since like almost 2 decades now, or since 2 decades, yeah, since 2 decades, this has been support. So I'll be looking down here, maybe get some buy orders around the 1,000. It would be a 50% retrace from the top, so this would be also quite nice to see for a buying opportunity. If we break this trend line on Amazon, then this is gonna be interesting. Well, then, yeah, I don't know what will happen. Maybe we go back to 500, maybe lower. I don't know. This is gonna be determined in the future. But until then, it could also happen that we see like a more slow push to the downside, and then see the 200-week moving average like flatten out, and then see it like align with the trend line right here, and then the price will rebound from the 200-week plus the trend line. So this would be very nice to trade. But yeah, so going on to Google, I don't really like the Google chart in my opinion. We've seen like a channel to the upside, like an upward channel right here, which now has been broken and retraced. So this is quite interesting. We could now see head and shoulders. Maybe we could see a complex head and shoulders. If we like go like this, you can see like 1, 2, then also a head and shoulders right here. 1, 2, then another one right here, and like 1, maybe, and maybe get a second one. So a complex head and shoulders is in principle just you have two or in full 4 shoulders and 2 heads. So you have shoulder 1, shoulder 2, then head 1, head 2, and shoulder 3 and 4. So this could also just be a simple head and shoulders in which we have like 1 shoulder. So we would have to delete this. Oh well, that happened. Or just like 1, 2 head, shoulder, head, and another shoulder. So we have this neckline around 1000, and if we break 1000, then this is going to be interesting, which in my opinion is actually quite likely. We already seen it break, yet it has been a fake out. So you could call this, if we go a bit closer into 1 hour, you can also see here that we broke the higher highs. We made a higher low right here and have established a higher high, yet it has not reached above the high from which it broke to the downside. So this is quite weak on Google, in my opinion. If you'd like to trade it, then I was looking for a breaking of 1000 psychological with some clear volume. Yeah, on Google it's the same. You can see the most volume. This has been quite a climax actually. Has been seen trading the break right here, and actually quite little bull volume compared to the break, like almost half of it right here on the rebound. So, and it's also been declining since then. It's not, so in my opinion, this is more of a short-term rebound, and on the RSI just setting in lower highs, so we can so the price can move a bit more, a bit lower, and just cool off the RSI and general levels. You can see like the trend, how it has established a new high right here on Google, or at least it came down almost to 0, and now we might see setting it a higher low right here, and if it sets a higher low, then we could see continuation either or much more downside. So this is Google. If you go to Apple, and I'm going to make this quick. We've seen it, the trend line break on Apple, and this has been a multi-year trend line for over a decade. So this is quite important actually. I'm looking now to levels of like 130, which has been resistance right here and broken. And also here we've seen a rebound. If on a weekly, if you go to the daily, yeah, also very important, we've seen a nice rebound from the 200-week moving average, which I told you about. So Also here, declining volume compared to the sell volume, quite little. If you go to the 1 hour, you can see it wants to break to the upside. It could very well retrace like up to yeah, even 170 before we see further downside. In my opinion, it will not go above the 200 hourly moving average. We've seen a bull cross, like a slight bull cross of the 12th and the 26th. But as you can see, we already, or we also have seen it here a little bit and then seen a fake out. So I don't know about the validity of them breaking bullish. You can see here also right here, but not much downside. The bear breaks of the moving averages have yet, or are a bit more clear and are more reliable than the bull breaks. And that's not too uncommon in the bear market. So, or yeah, since moving averages are usually or are trend based, so the trend is your friend when you look at moving averages. So yeah, on Apple, we could break to the upside. It mostly depends on the S&P and so forth. And yeah, we haven't even touched the 12th period on the daily. So this is not looking too good. You can see we have also big resistance right here, and in my opinion, if we go back if we go back down to 150, we most likely see a lot of breaks and go down to 130 until, or maybe right here until 140, and see maybe a second rebound then. But what could also happen, and this would be more neutral, is that we are going to see an equilibrium and see then for the downside. But if you go to the S&P 500, and you can see that in my opinion it could happen that we have a retrace, that if it a retrace to recent support, if it's similar to the movement in 2008, then this could very well happen, and then we would also see a bit further upside in other stocks. Yeah. So, and finishing with CGC. This is interesting. So there are a bit more, or there are a few points I would like to point out, or a few signs I'd like to point out, and that is first, the channel. We've seen since couple of years, and it has been broken to the downside. The trend line, like, we only had 3 touches, so it's not too established. And you can see like one here, and one here, until it now broke bearish. But, and that's a big but, it broke bearish in a trend reversal pattern. So what could happen? You can see, in my opinion, it's quite clear. We have this falling wedge on the daily, and now are very tight. If you go to the 1 hour, you can see we had an equilibrium down here, and a bull break of it, touching the trend line again. Now we are a bit in consolidation mode, so we could see this break bullish in the very near future. Of course, after this weekend. So you'll want to be looking at this, or yeah, especially on the daily time frame, since we could see a retrace up to like 36, and then if we go to 36, it would converge with, or I don't think we'll be touching this trend again. We could, yeah, we could. If, then we most likely will set, or if we break this falling wedge to the upside, which most likely it will, based on statistics, then we will most likely set a higher low, and maybe then touch this trend line, and then it would look like it is breaking bullish. Maybe find resistance at 36, set a higher low right here at maybe around 31, and then see continuation to the upside to like 46. What, in my opinion, or why this couldn't happen is because we could see a head and shoulders. So we would see our head, or a shoulder, our head, and then our right shoulder. So and then it, in my opinion, it wouldn't go above 36. If it does, then it most likely will retrace to the trend line, and then we'll see what's going to happen. But that's in the future. And then if we like only go to a 36, then this will most likely end, and we'll see a head and shoulders and see further downside. Yeah. You can also see like the declining volume in general as we go lower on this falling wedge. And yeah, I'm quite excited for CGC. I most likely will trade this. I would look for an entry opportunity on the breaking of this wedge by first breaking the trend line on the hourly and on the daily. Then maybe go back to 30, see a retrace, maybe touch this trend line, maybe it won't. I'm not quite sure. And I want to be what I want for my trade to happen, or for my entry to be mostly ideal, is a breaking of the trend line, a higher high, a higher low, and then see the trend change confirmed. So it could look like, if you go to the joining, like this, breaking the trend line, see it come back to right here, establish a higher low, and then I'd like to enter on this higher low, or on the breaking of the higher high or higher low right here, and then see continuation to the upside. And I either want to enter right here or right here. Yeah, so that's the trading strategy for CGC and other tech stocks. Hope you got something out of it. Bet you did. Yeah, hope you are watching the markets and doing some good TA on them. I'll be catching up with you next time, and see you then. Bye.